As we start the month of November, can the market rally continue? Well, we're going to talk about that this morning on 3 Minutes on Markets and Money. While yesterday was Halloween and the markets did sell off just a little bit, the Dow actually turned in its best monthly performance since 1975. Certainly doesn't seem that way. This market has been such a bear this year, psychologically speaking, has really weighed on investors. So you have this really excellent outsized return on the Dow, and it really kind of goes unnoticed. It just doesn't feel like we're having that kind of a rally, but actually we are. The market has done very well over the last 4 weeks, something that we have been discussing several weeks ago, that we were forming this bottom, and very likely, given the oversold conditions, we were going to get a rally in the markets, and that was confirmed by the turn up in the MACD index, which gave us our buy signal. And that really kind of gave us that lead to this rally. Now, the market's done a very good job of this in October. As we enter November, can that continue? That's really kind of the big question. Yesterday, market sold off here a little bit, but today market futures are pointing higher again, heading into the Fed meeting tomorrow. That's going to really be the question here. Right now, the Fed's expected to hike rates by 75 basis points, but what people are really looking for here is some clues as to whether or not the Fed is about to start tapering off the speed or intensity of those rate hikes. So looking for 50 points in December, 2 25-point rate hikes in 2023. That'll be the end of it as the Fed approaches its terminal rate of 5%. But is that going to be the case? Well, we need to see, of course, inflation starting to come down more sharply, maybe unemployment starting to rise. That's what the Fed would like to see to suggest that these rate hikes are finally taking hold in this economy, starting to slow that rate of inflation. Unfortunately, they just may get a little bit more than they expect. This is why we continue to talk about the fact, use this rally here that we have to reduce your risk, rebalance your portfolio, raise a bit of cash, do some tax loss harvesting for the end of the year. But again, start taking some steps as we go through this month and into the first 2 weeks of December. Take some steps now. That first 2 weeks of December, markets typically sell off as mutual funds distribute their year-end capital gains, do their distributions for the year. But also because as we move into next year, the rate of profit growth is going to continue to be revised lower as the economy does slow down. Again, the whole reason the Fed is doing what they're doing is to slow that rate of economic growth, which will have a negative impact on both earnings as well as corporate profit margins. So that is really kind of built into the cake at this point. Prices still have to adjust for those lower rates of earnings, and that's still coming next year. So again, use this rally as we've been talking about. Do some reductions here. Start now. Markets are getting a little bit overbought here. They still have some room to go higher, but start now by raising some cash a little bit at a time. As the market continues to rally, continue to sell a little bit more until you get to your target allocation exposure as we go through this month. Again, Fed tomorrow makes their announcement. Midterm elections on Tuesday of next week. Then we'll have a little bit clearer picture about markets going into the Thanksgiving break holiday and the 1st of December. I'm Real Science Roberts for 3 Minutes on Markets and Money. See you back here tomorrow.